Tonight we find out if the big name companies out there are going to get A's on their report card. We've got Apple, Amazon, Alphabet, and even Amgen all reporting after the bell here tonight. So we're going to take a look at that. We're also going to examine what's going on with interest rates. We've been mentioning this recently, but rates continue to move up. In fact, today, for the very first time in quite some time, we found that the 30-year Treasury hit a 3% yield. Now, that's not the 10-year that everybody likes to track, but the 30-year is also a very important instrument, and so we are at that big round number of 3%. We're going to try to take a look at a sector that might be positively impacted by those types of rate movements and place our example trade in that sector here today. So let's go ahead and get started. Welcome to the Market Outlook video. Today is February 1st, 2018. I'm your host, Brandon Van Zee. It's a pleasure working with you here tonight. Whether this is your first time checking us out or whether you're a repeat visitor, we want to certainly do our best for you here today. Now remember, now that you're watching this on YouTube, we would highly encourage you to subscribe to our YouTube channel by clicking that red subscribe button. While you're there, if you wouldn't mind giving us a thumbs up to let us know that you appreciate the effort that goes into these videos. Remember, it takes a couple of hours to produce these videos and do the post-editing and all of that. So it's a big commitment out of both David and I. If you appreciate that commitment, make sure you are letting us know that by giving us the old thumbs up on YouTube. You're also welcome to scroll down below and leave some comments if you enjoyed the presentation or if there's some things that maybe you need some clarification on. In addition to that, in the description area, you'll find some different links. One of them will allow you to sign up for our email distribution list that will entitle you to check out all the different overbought and oversold clusters in the S&P 500 each day, along with links to these videos to make it nice and easy and convenient there for you. Now, in addition to that, we're both heavy users of Twitter, and as David always mentions, the more that you like and retweet our information on Twitter, the more that Twitter knows that they should be pushing you our information in the future. So it's a way for you to ensure that you're not skipping a beat of the things that David and myself are talking about on Twitter. My handle, by the way, is at Brandon Van Zee, all one word. Follow our Market Scholars handle as well, which is at market_scholars. And be sure to follow David as well. In addition to that, we have a Facebook group, and we would love to see you join the Facebook group as well. There's over 800 of you on there now, and it's an excellent place to find information and to gather with other minds in this financial education business. And so check out that address there on the screen in front of you. So let's go ahead and check out what's going on with the markets here today. So starting with the S&P 500, you can see I've got the chart pulled up. This particular chart goes back about 3 months in time, and each one of the candles here represents 1 day in time. And as you can see, the S&P 500 had essentially a flat day here today. It was down basically 1 point, so that's about as flat as you can get. Now, unfortunately, that doesn't tell the whole story. You know, sometimes people have the tendency to just pick up the copy of the Wall Street Journal the next day and say, oh, market was flat, and they don't think twice about it. Well, reality is, if you look at this candle right here, it does give you a slightly more bearish element than what you might assume if you knew the markets were flat. The reason I say that is if you look at this candle that was formed here today, it has a long upper shadow right there. And what that's telling us is that at one point during the trading day, the S&P 500 was trading much higher, but by the end of the day, it had sold off and relinquished all of those gains to then close flat, or in this case, slightly down just a little bit. Now, how does that affect us from an intermediate term perspective, which is kind of the focal point of this particular product here, the Market Outlook video? And the answer is that we're still bullish at this point, right? And that's why we look at this every day. We don't know what is going to be around the corner, what's going to force the hand of the market to go one direction or another. The best we can do is keep a look at it every day, take the pulse of the market, so to speak. As of right now, you can see that the green line down below on the S&P 500 remains in that upper reversal zone, and therefore we would still consider this a bullish intermediate term market at the current point. Let's go ahead and take a look at our next chart setup here, which will be Actually, you know what? Before I do that, I mentioned in the intro the 30-year Treasury. Some of you don't track that particular instrument, but if you want to, and you're using the Thinkorswim platform and these Thinkorswim charts right here, the ticker symbol for the 30-year Treasury is TYX. So feel free to check that out if you want. Now remember, the way to read these different bond instruments on this platform is you got to move that decimal point to the left one. And so when you see that this closed at 30.05, just move that decimal point to the left one. And that basically means that the 30-year Treasury closed with a yield of 3.005. So just a hair over that big round number of 3%. Remember, if you wanted to take a look at the 10-year as opposed to the 30-year, which is a little bit more common for people to track, it's TNX. And of course, we had a big move in the TNX here today as well. We rose to the highest levels in several months at this point. You can see here that the TNX, the 10-year Treasury, basically closed at a 2.77% yield. So who knows, maybe we'll be looking at a 3% yield in the 10-year sooner rather than later as well. Clearly, there is a trend that's established here with Treasuries. All right, let's go ahead and take a look at our next chart setup here. Back to the U.S. stock markets, and this is our 4-grid, looking at it through the lens of the market forecast indicator. And when I was with you on Tuesday, we had all 4 of our different indices here in the United States with green charts telling us that we did have bullish conditions across the board. But I did mention at that time the first index that will go bearish, if there is one to go bearish in this move, will likely be the Russell 2000. And indeed, here we are 2 days later, that is the case. You can see that the reason that the background color of the Russell 2000 chart here is pink is because we now have a weekly bearish posture on that small cap index. Remember, that's not a strongly bearish posture. It's a weekly bearish. We had that green line here in the upper reversal zone on Tuesday. And then as of yesterday, we did cross below that 80 line, and we are now with a bearish posture here. As you can see, the intermediate term line is at 73.66 and falling. And so if you're looking for bearish trades in this environment, it might make sense to look at the weakest index out there. Maybe some small cap stocks could fit the bill for potential short trades or bear call spreads or whatever it is that you're hoping to accomplish here. But remember, on the major index, the S&P 500, the most widely tracked benchmark for stocks on the planet, we would still consider it to have a bullish posture as of now. And again, remember, we do have a lot of earnings announcements coming out tonight. If they all take a nosedive, it's entirely possible we end up with a bearish posture on the S&P 500 here sooner than later as well. But as it stands right now, it's just the Russell 2000 with the bearish posture. The other 3 continue to be bullish. All right, moving right along here, let's take a look at our next 4-grid. And in this case, we're looking at what we call 3 green arrows. And the 3 green arrows are 3 different technical indicators that we're looking at: a 30-period moving average, stochastics, and a MACD. And what we're looking for are all of them lining up with bullish signals at the same time. Now, if that happens, then it is awarding the chart what we would refer to as 3 green arrows. If all 3 of those technical indicators are bearish, it would then be 3 red arrows. If there's a mix, like we have right now, you're going to see that these charts on this particular setup here are going to have white background. And so if we had 3 green arrows, they would be green background. If we had 3 red arrows, it'd be pink background. But all of these are white, and this was the same case when I did the video on Tuesday. It continues to be the case. And as I mentioned at that time, it's usually the MACD that was giving us the disturbance there on Tuesday, and it continues to be the case. In fact, look at this. S&P 500 continues to track lower. Now remember, the MACD focuses on the momentum of the market. So right now we've got some lost momentum. We're trying to find our way. We also see that on the Dow Jones. We see that on the NASDAQ down here, and also on the Russell 2000. So 4 for 4, we've got a loss of momentum. In the case of the stochastics, we actually have 3 out of 4. Notice that the S&P 500 just lost its green arrow today on the stochastics. We got a red arrow now on the stochastics. So for the S&P 500, we've actually got 2 red arrows, and the only remaining green arrow is this one on the 30-day moving average on this chart that has been in place since back in November. And you'll notice that most of the other indices also have red arrows on the stochastics, with the lone exception of the NASDAQ is just hanging by a thread there. But again, keep in mind that those big A's that I mentioned in the intro, Amgen, Alphabet, Apple, Amazon, they're all on the NASDAQ. So if all of them tank after hours tonight on earnings for some reason, then we might very well see continued pressure on even the NASDAQ starting as soon as tomorrow. Let's go ahead and take a look at our next 4 grid. Remember, this is our longer term chart here. I'm not going to spend a lot of time on this because it doesn't move all that much. But what we're looking at here is a 1040 crossover method. This is a 3-year chart in each one of these 4 charts cases. So there's 3 years in length. Each one of the candles represents 1 week in length. What we're looking for is the 10-week moving average crossing up and over the 40-week moving average. And if that occurs, then we have what's considered bullish conditions according to that particular strategy. And we've had bullish conditions basically since 2016 at this point. Wouldn't be surprised at all. As a matter of fact, let's see here. S&P 500 crossed. It would have been back in March of 2016. So we're only about 2 months away from eclipsing our 2-year anniversary from bullish long-term market posture using this particular setup. So I would assume that we're going to get there because it takes a long time for those moving averages to cross. Remember, this orange line is your 10-period moving average. The black line is your 40-period moving average. So although prices could certainly come down and touch this 40-period moving average between now and the end of March, I would have a hard time believing that the orange line would, unless we come into some sort of just terrible circumstances with the market, which we're not anticipating at this point. So long story short, we've got bullish conditions from a long-term perspective across the board, despite some of the disturbances we've seen in the last couple of days. All right, moving right along now. Let's go ahead and take a look now at our first 12 grid. And for this, I do have to shut off the camera feed so that way you guys can see all of our different charts here, all 12 of them. And you'll recall that on Tuesday when I did this video, this was just 2 days ago, there was only 2 sectors that were in the pink with bearish postures according to the market forecast indicator. Boy, things can change pretty quickly, can't they? So here we are just 2 days later, and we have 6 out of the 12 charts in the pink and 6 that remain bullish. And so joining the utilities and real estate, who were the lone pink sectors on Tuesday, we now have consumer staples, we have healthcare, we have materials, and we also have energy that are all there with bearish postures using that intermediate term line on the market forecast. Now, having said that, I don't know how excited I would be from a bearish trade perspective quite yet. I would want to practice a little bit of patience here just to see how things shake out. And the reason I say that, if you look at some of these charts, let's kind of look at energy here as just one example. I'm going to right click on this energy chart. I'm going to go to maximize sell, and you'll notice that yes, indeed, we have bearish posture according to the market forecast because that green line has fallen below that upper reversal zone. It's now trending below 80 in this case. But if you look at price action all by itself, notice that we have this rising 30-day moving average. That's the reason that the moving average itself is green and the price is above that. So remember, this moving average can be either red or yellow or green. It's green when we have prices above a rising moving average, and that's where we're at right now. So despite this big sell-off we've seen in energy shares here in the last couple of weeks, we actually have some decent stabilization right where you want it, right at that 30-day moving average that can oftentimes be used as support. So we have what's known as a hold here today, a close above the high of the low day, with yesterday being that low day, and coincidentally it's bouncing off of that moving average. So I'm not going to take a bullish trade on it according to the things that we look at in the market forecast indicator here because we do have a bearish green line. However, for those of you that use other types of rules, maybe there's something of interest there for you with the energy potential bounce that we're looking at right here. And really the same thing goes with a lot of the other charts here as well, meaning that Yes, we have pink charts, for instance, in healthcare and in staples, but we're still above rising moving averages. And so the bears don't convincingly have the ball here. And I'm not talking about the Chicago Bears in football. I'm talking about the bears here in the stock market. And by the way, good luck to all of you Philadelphia and New England fans out there. I hope it's a great game this weekend. All right. One thing I did want to point out before we leave here, just take a look here at the XLF. That's your financials. Remember, financials are highly tied into interest rates. With interest rates going up, a lot of times it's a little bit easier for the banks and the brokers, insurance companies to do reasonably well, because they hold a lot of client cash on their balance sheets, and the higher interest rates go, the more basically free money they get from that. Now, of course, they still have to manage their risks on the other side of the business, but generally speaking, a lot of banks, brokers, etc., do reasonably well when interest rates go up, and that's indeed what we're seeing right here. Despite the market being down today, look at XLF. It was up 0.94% here today. We had a nice little bounce. And we, of course, have that green background chart. So as mentioned in the intro, our trade idea will come from that sector here a little bit later today. Let's take a look here at foreign markets. And as you can see, the foreign markets are a bit of a mixed bag as well. We've got a little bit more pressure across the board. I think it was on Tuesday, it was only Canada that was the only one that had a bearish posture. Now we actually have several others that are joining it, including India. Notice that India crossed below that moving average. So here's an example. Let me right click on this miniature chart for India, maximize sell. Here's an example where that moving average line went to yellow, just to help your eye identify that, hey, maybe there's something concerning going on here. What that's telling you is that there's kind of a mixed signal, meaning that if you have green, like we did over here, it means price is above a rising moving average. If you have yellow, it means that there's a mixed signal between those two different things. In this particular case, it means that the moving average itself is still rising, but now price is below that rising moving average. So it's more of a neutral looking feel right there for India. So we're going to keep our eye on that. Japan also has bearish posture here, but notice that Japan had a nice little bounce here today. You could have called that a Cahold as well, although it does have somewhat of a high upper shadow there. So we'll have to see how that plays out. And then we also have Germany and the United Kingdom, along with South Africa down below, that also have bearish postures using the market forecast. But all three of those continue to have that green moving average, telling us that despite the posture change on the intermediate term line on the market forecast indicator, they still have prices above rising moving averages. All right, moving on now to our final set of 12 grids, and this is our intermarket analysis 12 grid. And here you're going to see another mixed bag. You know, we have pink charts, we have green charts. The one that I mentioned before, that's one of the big stories of the day, is what's going on with interest rates. Well, that second chart up there at the top is telling you that story. Once again, that's the TNX. That's kind of your benchmark view of what's happening with treasuries. That's your 10-year, and a very spectacular rise that we've seen so far this year with interest rates. We also find, you know, one that kind of caught my eye was crude oil. Notice that crude oil had a nice 1-2 punch here in the last couple of days. So that's another reason, kind of going back to the energy sector. Remember /CL that we're looking at in the lower right-hand corner here? That's your futures contracts for a barrel of oil. That's not the companies that drill for oil or anything along those lines. It's the actual commodity itself. But XLE, that chart that we looked at when we were looking at the sectors, that is the chart that focuses on all the companies that participate in the oil patch. So your Chevrons, your Exxons, etc. And so with crude oil prices catching a nice bid here the last couple of days, and with XLE bouncing off of that 30-day moving average and forming a Cahold, maybe there's some bullish opportunities awaiting in the wings right there for energy prices as well. In fact, I think David has been sharing a lot of information regarding some of those commodities on Twitter. So let's go over here to Twitter for just a second. And remember to follow us on Twitter if you haven't done so already. My handle is at Brandon Van Zee, all one word. Market Scholars is at market_scholars. And David's, I believe, is at David Settle 42. Well, you can see some of the things that we've been talking about throughout the day. Oh, by the way, for those of you that are in my top-down trend trading classes in the past, I'm still maintaining that portfolio and still moving up stops when appropriate, et cetera, and we'll be resurrecting that portfolio once David and I start doing our daily classes again for our future clients. But one of the stocks we held in that account was eBay. And some of you might have saw eBay had a heck of a day. Now, I produced this during the day, so I don't know where they closed exactly, but when I took this screenshot here, they were up about 15%. Now, the nice thing about this one is, as I say in my tweet here, thanking the lucky stars today on our eBay position, we were 20 cents away from getting stopped out. So remember, sometimes you have the tendency to think that the investing gods are against you because let's say stock goes down 20 cents below your stop and then it bounces and you always feel like you're on the wrong end of the coin. Remember, if you actually look back at your own account, you'll probably find that you have just as many times where the market rewards you by just the thinnest of margins as well. And in this case right here, our stop loss was right down here 20 cents below where the low of that candle was right there. 20 cents. Today, the stock was up $6 in one single day. And so we were feeling very fortunate there. But anyway, here's what I was mentioning before. David was talking about Goldman Sachs's commodity outlook here and how it's the most bullish in a decade. So again, that kind of plays into that theme. What's going on with crude oil here recently as well. All right, the other thing that I should mention since we're over here, we haven't looked at the after hours movers quite yet. For those of you that follow me on Twitter, you'll know that every weekend I try to let you know which stocks are going to be reporting earnings that week. So that way you can kind of prep your trading accounts accordingly. And so if I come over here, at least on the web version, I can click on my photos and videos that I posted, which most of my tweets are going to have pictures on them for the most part. But I should be able to find our earnings here pretty quick. Usually it's on Sundays that I do this. Here we go. All right, so this is courtesy of Earnings Whispers here. And you can see on Thursday, let me see if I can actually zoom in on this. Hang on just a second. There we go. And what I'm doing on my computer right now, in case you guys were wondering, I'm holding down the control key and I'm hitting the plus sign. And that allows me to see things in greater detail. That might be a little trick that you guys can use on your computers as well. And if you ever want to zoom back out, it's control minus. But anyway, here's Thursday that we're looking at right here. And as you can see, after the close, they kind of have it broken down into two areas, a left side and a right side. The left side is the before opens earnings, and the right side is the after the close earnings. And there's your Amazon, Alphabet, we got Visa, another big time player, we got GoPro, we got Amgen, we got Cypress, we got Mattel, Edwards, and even another A. If we didn't have enough A's this afternoon, we got Athena Health rounding things off for us as well. So let's go ahead and take a look at what's going on with some of those earnings announcements. It is about 40 minutes after the bell as I'm recording this right now, so I think most of these should be up and running here. Let's see. We've got Alphabet, we've got Amgen. Let me pop in Amgen here. Okay, so Amgen is the chart in the upper left right here. Now the way to read this, I'm looking at a 1 day, 1 minute chart for this particular view. And this shaded area right here that I'm kind of circling is going to be your after hours session. So that way you can kind of get a sense, okay, are stocks falling or rising after their earnings announcement has been released? Now, as you can see, I'm just, eyeballing this briefly here, but I can see that out of these four charts, we got three losers and one winner. That one winner, by the way, is Amazon. You can see that it closed the regular session at regular session lows right down here, but as soon as they released their earnings announcement in the after hours in the shaded part, they've gone up significantly. Now, this is another stock that we own in my top-down trend trading class, the one that you guys used to attend on Fridays. We own 9 whopping shares of Amazon, but it's been a home run for us, and so we're very pleased with that action. On the other hand, we also own Apple. We own 51 shares of that in the paper money account, and Apple, as you can see down below in the lower right here, is down a touch in the after-hours session. It closed the the regular session at 167.78. and it looks like we're down to about 166 right now. So down about a buck or so on Apple. That's not the end of the world, but remember, whether you own Apple or not, it's important for you to keep your eye on it because Apple's the largest market cap company out there, and therefore it's really the most influential member of the S&P 500. So we got a big winner out of Amazon that's really just kind of getting back the losses it had during its regular session. We got a minor loser out of Apple. We got a little bit bigger of a loser out of Amgen. That's your one in the upper left, where they closed the regular session at 185, currently trading at about 178. So it's a $7 or $8 drop in after hours there for Amgen. And then let's take a peek at what's going on with Google here. Google closed the session. This is Alphabet. I'm still having a hard time kicking myself of that habit, by the way. Here it's been 2 years later that they've renamed their company, and I'm still calling it Google. I kind of wish they would change their ticker symbol, so that way it would remind my mind to call it Alphabet. But anyway, Alphabet closed at 1167 here today, and they're trading down about 30 bucks per share. Now remember, this is $1,100 stock, so that's not the end of the world. It's not quite as bad as it sounds, but that's still, you know, a 30-point drop after hours here today. So my guess would be, oh, and as I say that, it looks like we had a quick little spike up there. Then we're back down. Remember, after-hour session can be a little bit like the Wild West. You got to be careful there as well. But with all these out, let's take a peek then at what's going on with the Qs, because the Qs will trade after hours as well, which is the NASDAQ 100, and really not a whole lot of activity there. I'm a bit surprised. We closed at about 168 on the Qs, and despite 3 out of these 4 mega cap NASDAQ companies reporting and seeing negative stock price action, we have the Qs really just trading in line with where it closed the session. So hopefully we'll still see some stability starting tomorrow, despite some of these losses we're seeing in one-off names there. Okay, so with that earnings watch out of the way, let's now go back to the paper money account, put in our trade example or application idea for the day here in paper money. What I thought we would do is, let me come back over here to just a single chart, and I'm going to pull up Goldman Sachs. Now, Goldman has been a relative laggard. Some of you that have followed them recently will know that they really haven't held up as well as some of the other financial companies out there. In fact, there was a tweet that I put out there maybe a week or two ago that many of you saw where I said I was genuinely surprised to learn that Morgan Stanley's market cap was bigger than Goldman Sachs's market cap for the first time in over a decade. So my oh my, have the mighty have fallen here to some degree. But with that out of the way, you can see the Goldman's up about 11%, not including dividends here, in the last 3 months. They're a little bit of a laggard compared to some of their peers. Now, we did have a 2-day pullback in Goldman prior to today, but with that huge spike in interest rates and sending so many financial companies up, notice this big candle we got out of Goldman here as well. It engulfed those prior 2 candles that we saw to the downside the prior days. In fact, some of you might be looking at this and thinking that it looks somewhat like a bull flag. And so if we were to assume that was the case, one thing that we could do from a technical analysis perspective, let's get our drawn items out here, and let's go to drawing tools. And I'm going to use this trend line tool here, and I'm going to click at the low point of this candle and click at the high point of this candle. That's our flag pull right there. Then the flag itself would be kind of this 3-day pullback that we experienced there along the way. Now, it's not an ideal textbook setup by any means, but they rarely are. So we're going to do what we can with the information we have in front of us. One thing that we can do after we've drawn an item on our Thinkorswim charts like this, we can right click on that drawn item. We can duplicate that drawn item, which I've just done now. And now I can start dragging that out of the way. Now, the reason we would do this is it can help us project prices if you believe in that kind of concept when it comes to your bull flag breakout types of trades. And so let's go ahead and kind of set this up as though we're going to form a new flagpole here. And so I've kind of released that there. Now you'll notice that this is going off into the ether. So I kind of need to drag this back into place here. In fact, another way we can do it, I kind of dragged it over here to the right. Another thing you can do is click this gear icon with chart settings, and you have a price axis and a time axis where you can kind of toggle those different things as well if you want to give yourself extra space. In this case, with the time axis, I am going to go over, let's see if 10 will do it for us. Okay, yeah, that should give us some nice room to work with there. There we go. So now you can see that after duplicating this flagpole here, this takes our target up here to about 290 bucks. Now, obviously, we don't know the future, right? Technical analysis sometimes works, sometimes doesn't. There's nothing that's 100% out there, but at least it's something to start with for those that might have had a bullish bent towards Goldman to begin with. So what I thought we would do today, with that in mind, with $290 as kind of our target, let's go over here to the trade tab. And I've got the March contracts pulled up here with 43 days left. A lot of times we're looking between 20 and 50 days for these types of trades. We do have some weeklies that are available, so feel free to explore those as well. But a lot of times the monthlies are a little bit more liquid. And what I thought we would do is let's buy a call the way we normally would with a long call vertical, which is normally we buy one in the money, we sell the first one out of the money. Well, in this case, if we've got an upside target of 290, we don't want to necessarily sell ourselves too short, because we could certainly go out there and sell the 275. But remember, if the stock were to go significantly above 275, we would not be continually rewarded for that. So this is a little bit different of a long call vertical. This is a debit spread here, but we're purposely pushing our sold strike out to the 290 because that's where our target is for that trade. Sometimes that's a great idea, sometimes it's not. We'll find out, and this is why we practice here in Paper Money. So I'm going to right click on the 270. I'm going to go to buy vertical. That loads up our trade down below where we're trying to buy the 270 call there in March. But remember, we're going to have to change by clicking the drop down here on the sold portion. We're going to go down to the 290s in this case right there. And you can see that we're going to spend about $7 on this debit spread right here to access the $20 available in our spread. In other words, if we're right, we could end up making about $1,300 here, even though we're only risking $700. And there's a lot of different places where it could land along the way. Remember, if this thing ended up just going up to, let's call it 280 instead of 290, we could still make a little bit of money. We just wouldn't max out our gains. We are just going to do one contract here again. This is a high price security, and so it's going to take a little bit more capital there. And we're just doing this for practice purposes only, just to see if this interest rate environment has legs and to see if this somewhat lagging stock within the financial sector can play a little bit of catch up here. So confirm and send. Just reviewing this one more time, max profit is about $1,300, max loss is about $700. Remember, our goal here is to have Goldman Sachs go up and through 290, or at least right up to 290 on expiration day there in March to maximize this particular trade. So I'm going to send that off and we'll see if we can get filled on that. So with that, I want to thank you once again for joining us here tonight on the Market Outlook video. Remember, Market Scholars will be up and running later on this year, and we hope many of you become our clients there as well, where we're going to have daily classes where we're going to be placing trades and managing and running portfolios with various investing plans. I'm looking forward to that when that day does come. Remember to enjoy the Super Bowl this weekend. David will be with you tomorrow. I'll be back with you next Tuesday, and let's see how those earnings results continue to shake out after the onslaught that we saw from the mega caps here tonight. So with that, I want to wish you all the best with your trades and your investments, and goodbye for now.